Welcome to the Slop Farm. Enjoy the video.
You start by confirming the essentials: an active Binance account, 2 FA-enabled and small test funds. Next, generate an API key and secret. Only enable trading, not withdrawals, so your bot can place orders but cannot drain funds. Then pick your bot, managed service for ease or self-hosted for control. Each has trade-offs in cost and security. Once done, store the secret securely and make a short paper trade plan to validate connectivity before risking capital. Now configure the trading strategy and risk parameters. Choose grid for range markets, DCA for dollar cost averaging, scalping for high frequency, or trend following for momentum. This decides entry and exit rules. Make sure to set position size per trade and a stop loss percentage to protect capital, plus take profit levels for automation. Then backtest using historical Binance data and paper trade for at least 1 to 3 days to observe behavior. If results look unstable, tighten risk or adjust. Finally, deploy the bot with a small live allocation and monitor performance closely. Watch order fills, latency, and slippage. Make sure your bot respects Binance API rate limits and that balances reconcile after trades. If you see unexpected orders or API errors, pause the bot, review logs, and check network stability. One key troubleshooting tip: if anything looks compromised, immediately revoke and rotate the API key. Then reassess permissions and audit recent activity before.
Thanks for watching. Consider subscribing if we helped you today.